Hi, I'm Carla DeAndre, a licensed insurance agent in property and casualty and life and health insurances in America. I'm co-owner of DeAndre Insurance Group. I'm here today to tell you about homeowners insurance. There are things that you're better off knowing before you purchase your policy than not knowing. In fact, if you were to tier them, the first thing you'd want to know is how solvent the insurance company is. Now, I actually have a public face. She's called Ms. Risk, and she's cute. Ms. Risk gives these tips, and you can follow her at hashtag Ms. Risk or at Ms. Risk on Twitter or on any of our sites, DeAndreInsurance.com, on Facebook, our independent site. But I want to get back to the fact that you need to buy from an insurance company that will be there for a claim. That's number one. Number two, you need coverages that are relevant to you and your lifestyle in that policy. And number three, yes, you must look at prices. So let's assume you have a very solvent insurance company. By the way, you have the right to ask, how do I determine your financial strength and solvency? Many will reference you to an A as in apple, M as in Mark, BEST, B-E-S-T, AM Best report, which gives both the financial strength and the size of their surplus, which means net worth. All right, so number one, you find someone who is preferably A or better in financial rating. Number two, there are different things, different clauses put in your policy. You want, unless you decide you're going to insure it yourself, called self-insurance, you want a very robust policy. Here's one example. If you're a pet owner, don't presume every policy covers animal liability. So if your animal scares someone or bites someone, that may or may not be covered. And if it's not covered, legal fees, medical costs, that's on you personally. You may want to ask about that. Sometimes it's only covered for certain breeds. So when you look at your policy, you're going to look at the value of your home. That's the real property, the house dwelling itself. Any unattached dwellings, that's going to have a limit as well. And you're going to look at things like screened-in porches or attached garages. Are they covered? And if they are they covered for the replacement cost? Are they covered for more than the replacement cost in case there's a legal law that you have to use more expensive items? Are they covered for less than replacement cost? You must determine that. It has other effects. I'm not going into the details now, but that's an important measure. Within your home, you have furniture, you have collectibles, you have different items. You have to determine if they're covered and what are they covered for? Do you have wind? Do you have earthquake? These are called catastrophe coverages. Sometimes you may have them, but you may have them at a different deductible level than fire or lightning. Those are called all other perils, fire or lightning or smoke. So you're going to want to read the detail. That devil's in the detail, and you'll only know about it when the loss happens, unless you take a moment. That's what this is. It's a tip on how to address your homeowners. The last is premium. So we all want to buy smartly. So first you want an insurance company that will be there to pay. Then you want a contract that says they have to pay if certain events happen. And then you want to have a proper premium. So it's good, if you can, to get a few quotes. In closing, you as a policyholder have obligations as well. You must protect your property if it becomes damaged. You must protect the remainder of undamaged property. You must be truthful. You must include any additional interests, which could be a financier, a bank, a landlord, multiple levels of credit. So if you do all of that, you've done the best you can in transferring some or the majority of risk to a solvent insurance company. Have questions? Send it in to us, info@DeAndreInsuranceGroup.com, or give us a call, 305-200-3151. Thank you.